Hello. Welcome to the first day of summer. Today is the summer solstice, the longest day of the year. So thanks for coming. My name is Rob. I organize Idea to IPO. We've been doing events in Silicon Valley for many, many years. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 350,000 members among all our meetup groups all around the world. We've organized, promoted, and produced over 3,500 events. By any standard, by any measure, we're the most active, most prolific startup event organization in the history of Silicon Valley, bar none. There's a pretty long pause there, so I was getting kind of worried. But anyway, thanks for all your support all these years. So we hold venture capital panels, legal workshops, networking events, and more. We hold an event nearly every day of the week. Check out our schedule at ideatoipo.com. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that is practical, actionable, and relevant, stuff you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is a global aspirational ecosystem. It attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley or the greater San Francisco Bay Area? Nice. So who here was born and raised in Silicon Valley or the greater San Francisco Bay Area? All 6 of you. Well, welcome, natives. So whether you were born and raised here or just arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. With regard to value, it's important that we provide value at each and every one of our events. Not just value for your money, which is important, though, because we know many entrepreneurs are struggling financially. So we make sure our events are free or affordable, and if you cannot afford to cover charge for whatever reason, come talk to me and we work something out. And at each and every one of our speaker events, we make sure that we provide a delicious buffet. Is that a delicious buffet? All right, it's always the same 10 people, but thank you. But I want to thank Procopio for sponsoring that buffet meal, right? More importantly, though, at each and every one of our events, we want to make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger, besides our moderator and maybe our panel? So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many partners that help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, and lots of other players in the Silicon Valley startup ecosystem. Tonight, we're grateful to Procopio once again for hosting us at this beautiful venue. Is this a beautiful venue? So let's hear it for Roger and Procopio.
All right. Never know with Rob. Welcome, everybody. How y'all doing? I don't know, that was pretty weak. How y'all doing? All right. Well, welcome again. Always a pleasure to host Rob and Idea to IPO events. Really great to see everybody and see lots of repeat offenders. So as Rob mentioned, my name is Roger Rappoport. I head up our emerging growth and venture capital practice group at Procopio. So I deal with companies all the way from inception through IPO, most often M&A exits. And before I became a lawyer, I was an entrepreneur for 10 years. So having sat across the other side of the desk kind of gives me a different perspective. Anyway, welcome once again, and back to you, Rob.
Thank you, Roger. Some of our other partners are here tonight. I would also like to have them say a few words. Let's hear it for Ken and Cordify. Applause.
Thank you, Rob. Hi, welcome to this event, and always happy to be here at this awesome community of investors and entrepreneurs. So my name is Ken, and I'm the founder CEO of Codify. Codify does software development services for early stage startups and later stage startups. We help early stage startups to build their company from ideation to MVP, and the later stage startups in whatever functionalities and features they want, as well as grow the company by 10, 15, 5, 10, 15 times, all from an offshore perspective. And all this work, we actually do it on a project-based basis. We have a team of solutions architects who works with the entrepreneurs or with the later stage companies to build out their products. And these solutions architects are experienced in various domains, and so they can very easily take you from the ideation to the MVP stage. And to make it much more real, actually, we have been doing this since 2014. We've been working with several startups. Maybe we have crossed 30 or 40 startups right now, and various smaller projects as well. And we are based here in Sunnyvale. The offshore team is currently in India. We are building up a team in Mexico as well. So come talk to me. I'm at the end of the table, end of this hall right here, and we can talk more. Thank you.
All right, next up we have Cynthia and Car Consulting. Applause.
Thank you, Rob. I appreciate you always having me. I do personal brand marketing. I help people look good to hiring managers. I'm doing a contest. I always do a contest at the end. See if which candy is going to win. Right now, Reese's is winning, but please come and add to the Reese's or get a Kit Kat or a peppermint and talk to me. I'd love to talk to you. Thank you.
Okay, next up we have Katka and Katka.ai. Applause.
Hi guys, it's correct. I'm Katka. The company I'm working on is called Katka AI. You see, my ego has no limits. I have a quick question for everyone here. Who here met someone new who you would like to add into your personal network tonight? Awesome. What do? Do you add them on? Okay. Oh, that's very flexible. Yeah, so for me, I usually would add someone on LinkedIn, and the conversation would kind of die off. You have a new person, new Pokemon in your Rolodex, but then what? So what the solution I just first developed for myself, and I now I'm offering it to you. You can use it tonight. You can just record a voice memo to your personal networking assistant, who can just capture all your information you learn from your conversation and drafts follow-ups you can share with people in your own voice. It's not templatey. It's something that you can bring those LinkedIn connection into life and start a conversation. Thank you. Katka AI, talk to me there. There's my demo stand. Thank you. Thank you, Rob.
Okay, next up we have Erica and Deep Sea Development. Applause.
Hi, everyone. Good to see you all. Deep Sea is an electronic development company, so please get out to your booth, and we can help you with accelerating your electronics devices and have the amazing smart and connected devices. Thank you.
So though our local mission is to support entrepreneurs here in Silicon Valley, our global mission is to democratize entrepreneurship and innovation all around the world. To that end, we maintain a robust YouTube channel, youtube.com/idea-to-IPO. Check it out. We have tons of videos there, and this rich, valuable content is available on demand, anytime, anywhere, totally free of charge. Our partner in this endeavor is Tim Jeggers, one of the top professional videographers and digital marketing experts in Silicon Valley. So let's hear it for Tim. Applause.
Thank you, everyone. So I'm Tim. I run a small media production house called Pacific Bay Media. I specialize in videography and just kind of video strategy in general. I've been doing event coverage with Rob for quite a while. A couple other people all throughout California that I work with. And if you have any questions about video production or implementing videos or what kind of videos your business might need, I probably have an answer for you or can at least point you towards the people that could help you. And yeah, I'll be around all night. So if you want to talk, I'm here and I'd be more than happy to answer any questions. Thanks.
So here's the schedule for the rest of the evening. Our panel will hold a short, brief, but brilliant, dynamic, entertaining, scintillating discussion. Then we'll take pitches from pre-selected startups, and that'll take us to about 8:40 p.m. We'll end the program, stick around, network, socialize, and connect. As a courtesy to Procopio, we'd like to leave the building about 9 p.m. There is an after party, and I always like to provide choices, and the choices again are the Rosewood, it's not Thursday, the patio, or pizza my heart, but more on that later. And we will have ice cream at the end of the evening to celebrate summer. So that being said, I'm going to hand it off to our distinguished moderator, Roger Rappoport, partner at Procopio. So let's hear it for Roger and our panel. Applause.
All right, so we're on limited time. You said, Rob, we've only got 45 minutes? No,
Not.
just kidding. We got 20 minutes, so we got to try and be as brief as possible, try and cover as much ground as possible. The goal really being to give you as much information about pitching and what investors are or aren't looking for. But really quickly, just going to go down the panel. We've got Nick Larson, angel investor, Camila Orozco-Gil, investment manager at Symbia VC. We've got Paul Russo, an angel investor, Band of Angels, Keiretsu Forum, Darwin LIng, who is the founding general partner of Good AI Capital, and Jordan Wahbeh, managing partner of SV Ventures. So panelists, if we could just go down the line real quick, introduce yourself, tell us about your sweet spot in terms of sector, size of investment, and whether you like to lead. Go for it, Nick.
Hi, everyone. My name's Nick Larson. A serial entrepreneur. I've only done a couple angel investments, but I'm really excited about the ones that I have done. It's ag tech, and then also in the beverage space. There's a really cool company I met yesterday at the Italian Innovation Forum, and maybe I'll tell you a little bit more about that. But let's talk about storytelling. Let's talk about what investors want to see, and see how we can use our network to be valuable to what you're building. So thanks for having me.
So I'm Camila. Sorry. I'm Camila, but I'm from Colombia, and I have lived for the past 6 years in the EU. I have been in venture capital for the past 3 years, so I hope I can give my perspective from the European ecosystem today. I'm representing at the moment Symbia VC. It's the investment vehicle from the Pfeiffer Holding family office, and we invest in seed to Series A startups focused on construction technologies, on material sciences, on industrial and manufacturing, energy, and climate tech. So a little bit of everything. Yeah, happy to hear you.
What's the check sizes typically that you guys write?
So from 300K to 5 million. So it really depends on the case.
Okay, great. Paul.
Okay, I'm Paul Russo. I'm the oldest guy here. That probably means that I'm the wisest. So I started as a super techie, got a PhD at Berkeley, involved in the first CMOS microprocessor, started 3 chip companies. Some of you are too young, but remember 25 years ago we had these big fat displays on our desks. So when those moved to flat displays, we had the chip and every display in the world, big NASDAQ IPO. So, but I've been doing angel investing for 35 years, lost millions in the process, but learned some real lessons. So 7 years ago we decided to create an entity to allow global people to access the best startups and solve the 2 big issues, what to invest in and liquidity. So we're now actually, I'm the CEO of Quito. Tom Vogelsung's here, he's one of our investors advisors, and now we're working on an IPO to allow the whole world to get the best startups.
And Paul, you go in very early. What's a typical check size for you guys?
So our model is a statistical model. We're agnostic as to market and geography. So we invest in everything as long as whatever we're investing in is in the top 3-4% of that category. Biotech, tech, medical devices, Israel, India, Canada, US. We have 90 portfolio companies. And after 5 years, we can show with a track record that we achieve amazing results safely.
Okay.
But we typically invest 100K at pop. Okay. But then we do follow-on investments. But once
well, that's really important money, you know, at the very, very early stages.
Yeah, but once we finish the IPO and have a lot of capital, we're going to start making bigger checks.
Darwin.
Hello, my name is Darwin LIng. I'm the founding general partner of Good AI Capital. Good AI Capital is a VC fund. We focus on early stage AI companies. Specific sector, we focus on fintech, healthcare, biotech, robotics automation, and B2B SaaS. So we have a wide gamut of investment focuses. So we have an interesting name. We call ourselves the Good AI Capital. The good really stems from our investment thesis. We have an investment thesis called doing good, doing well. So with that, we want to partner with entrepreneurs and founders who really have a deep desire to use technologies, in this case in AI, to tackle some of the most challenging problems faced across different industries. So like I said, we focus on early stage. So our focuses are usually start with seed, but we can do Series A, Series B, and sometimes Series C. So our check size range from $250K all the way to $5 million. So typically our initial engagement with founders is at the seed stage because we think that's actually, we can add the most values.
And do you typically lead?
We can lead also. Yeah.
Excellent. Great. Jordan.
I'm Jordan Wahbeh with the Silicon Valley Venture Group. My first thought is, what's Nick Larson bringing the Italians to this event? Come on, man. This is for here. We're a Silicon Valley Venture Group. We're an investment group. We do syndication. We are a venture capital act with a syndicate form. We've got 9 chapters. We do B2B, B2B2C. Check sizes 150 to 500. A wide sector of technologies, SaaS, enterprise SaaS, AgTech, IoT, FinTech, Health Tech, digital health, cyber, logistics, and transportation. We only work with companies that improve the human condition. So no TikTok, no twerking apps, none of that stuff. We need real stuff that at the end of the day, when you wake up in the morning, look at yourself in the mirror, what did my company do? We made a significant improvement to the people, to the earth, to yourself, to your company, to your village, whatever you are. So have fun, guys.
Excellent. Great. Thank you. So Paul, maybe we'll just kick it off with you. You've been in the Valley a while. What are the major differences, in your opinion, between the mindset of VCs and angels? So you're sitting next to Darwin, who's an angel, who's a VC. Any differences in mindset?
Sorry, yeah, VC investments are like wine. It's a vintage year. If you invested in 99, you lost your shirt. If you invested in, 2001, you might have done real well. But I find that VCs typically don't invest their own money. They have very nice digs. And their goal is to make money either through fees or because they have a carry on the successes, even if the whole fund doesn't perform. So we're a little bit anti-VC. So our model is we're a C Corp. So our investors are shareholders. The only incentive we have is stock options. Shares don't go up, we don't make anything. And so because we invest our own money. And in fact, we have about 100 advisors, all of whom are investors. So I lost millions after my first company went public, and I thought I'm smart and got some money right. New York started calling, .com, 100K, 100K, 100K. .com crashed, $4 million gone in 6 months. So one of our religions is we take advice from people who are putting their own money in as well.
I would say, though, that VCs have, a common interest with you. They want to make money so that they can have happy LPs and that they can, raise the next fund. So I'm not sure if it's all about the carry, but anyway, let's move on. Darwin, in your opinion, what are the key components of a successful pitch? We're going to see some tonight. Maybe we'll have a post-mortem afterwards. But for folks that aren't pitching tonight, what are the key components?
Yeah, so I think I would say the key components include 3 of the following. We look at product, we look at market, and we look at the team. So I think part of it, the pitch, whether it's a pitch deck or just like an elevator pitch, I think you have to create a very succinct story as you explain to whoever the audience is that what is your product? What does it do? Who is the customer? And how are they going to use it? And more specifically, how are you going to solve their problem? I think that's actually entail a successful pitch. And of course, the team is something where usually including a pitch deck. The idea is that I think I will go something where we'd like to see, other than the technical expertise of why these companies are being formed, why you have the particular skill sets. What I'm looking for is also how these founders are coming together, and why do they want to start this company together, and what is the relationship, the prior working relationships. It's hard to cover all that within a 1 minute pitch, but that's something where we're looking for.
Anyone want to add anything to that?
Yeah, I mean, the idea is to get to the next meeting, right? So if you can be tantalizing enough to get that momentum, then maybe Jordan will give you a chance to, he'll harass you, that's for sure.
Damn right I will. Yeah, I said damn on YouTube. Who gives a crap? No, the pitch is an art. It's no longer a science. There's 1 minute pitch, 3 minutes, 5 minutes, 7 minutes. Guys, you have to master it. And you can listen to all of us. There's millions of resources out there to make your pitch as crisp, as clear, as penetrating as possible. If you cannot do that because you're starting a startup, there's a problem there. You're not born to make a pitch, but you've got to figure out how to do it very quickly and very efficiently.
At the very early stages, and it sounds like a lot of you invest at the very early stages, where you have maybe a solo founder and some advisors, or maybe people that are working part-time. How do you view that? Because it isn't a fully baked team, but maybe you've got a really promising entrepreneur. Is that something that you'll invest in or take it further? Camila?
I think it depends on what their ambition is. If a founder, in my perspective, is willing to understand that what they have is not what the company needs for everything, then that's a good idea. So for instance, I know a lot of founders that come from engineering backgrounds, and they know they're great with the technology, they're great with the product building, but sometimes they're not great business people, or they're not great in sales and marketing. So the fact that they know from the beginning, like, yes, I want this money and I want to raise capital because I want to bring together a team that knows how to kind of fill these gaps, then of course, if there's a great idea and a founder is humble enough to acknowledge its skills and its things that can bring to the table, then yeah.
Would you agree with that at the seed stage, Darwin? If you've got part of a good core team, that you would take a bet on that?
Yeah, absolutely. I think that's, I myself was an entrepreneur before founding this, so I know how difficult it is. What I don't like to see is whether you just say some of the entrepreneur, they would just put a lot of people, a lot of names in the deck. And then the idea is that first of all, they try to name drop. And then when you try to go further, they would just say, oh, these guys will join if you write me a check 5 million today. So that's something I don't want to see, just as a caution. So something where to keep in mind. I rather see really, like I mentioned before, your working relationship, and why are these guys trying to help you, right? Other than the fact that they might, get a job once you got funded, that would be something, a red flag for us.
So I'll take the flip side of that. I think obviously you can't be disingenuous, and the names have to be real, but human beings, we seek pleasure and we avoid pain. Very quickly, we're thinking in our mind, is this person gonna help me? Are they gonna hurt me? Is they gonna be valuable? And we could do that through heuristics or shortcuts. So using numbers and logos, if those are real customers, you can very quickly add value. In fact, so I run a podcast called Silicon Zombies, and one of the guys that we had on was a quantum engineer who had just gotten done with a project with Google and Lufthansa, doing quantum engineering to reallocate planes and staff and passengers, because all that needs to happen within the course of a couple minutes. He did that immediately, and it was a successful venture, and they showed up that they can save minimally $250,000 per flight. So he was able to kind of bundle that in and package it and make it super valuable. And yes, he did drop some names, but it also drove a lot of credibility, which is important to do.
So let's get into the meat of pitching. So what are the common mistakes that you see entrepreneurs, and maybe Camila, you could take this one. What are the common mistakes that you see entrepreneurs making and that they should avoid? And as a follow-on, do you have any real-life examples where an entrepreneur made a mistake, and you went, I'm out of there, they're dead to me?
Yes. So since I'm a lot in like the material sciences and hardware and climate tech sector, a lot of the founders I come across with are scientists or people that are very into the technology. So I think one common mistake I clearly see every week is over-explaining the technology on the first pitch. Like as a VC, we need to assess first if there's a market fit, if there's profitability, and if there's a business model. Therefore, you should focus at the beginning to show that there's actually a business model to pursue. And then when we're engaged, of course, and the data room opens and so on, the technology comes as a secondary thing. Of course, it has to be there, but it's not a priority on a first pitch. And an example, an example is once I was very interested in this company who does semiconductor waste management. And we had scheduled 30 minutes for a pitch, and we spent 1 hour and 20 minutes. And the guy would not get to the point on what is the business model. He would explain the technology. I'm not an engineer. I was not getting it. But I was interested because it seemed like a great opportunity. However, he never mentioned what the business model was, and therefore I had no follow-up or whatsoever to give my investment committee. So I think that was a pity, but it happens.
Yeah, if I can add to that, I think there should be very little focus on technology except explaining in one slide what it is. You got to look at the business opportunity and the return on your investment opportunity. So if, like we saw in 21, some Stanford smart kid says, I'm worth 10 million because I have a good idea, you really have to look at things like that. Look at what they're trying to do. What's the competitive advantage? Why will the world accept their products? The technology itself is sorted out in due diligence. So I agree with you.
Anything else to add in terms of mistakes, Jordan? Darwin?
There's a human factor, like Nick said, and as you're working and you're about to engage with the company and the startups, I always think I have to do business with these people for the next 3 to 5 years. Is there anything about them as individuals, personalities, traits, honesty, or lack of, that would make me think, maybe I should not, stick my finger in that pot, because at some point, stuff will come to a head, and you want to know you're dealing with people you could actually work with and trust and have some confidence in. So it's tough to size you up on the first pitch or the second or the third, but it's just how people are wired.
Are there any things that entrepreneurs do or don't do that sort of trigger that alarm bell that says, yeah, I don't think I want to get married to them?
It's a long list.
Top 3.
I think transparency and honesty, you can detect that relatively quickly. If you don't know your numbers, you don't have to say, I don't know my numbers, but try not to fake them. And candidly, you're not perfect. The reason you are talking to us, we're talking to you because your company has flaws and problems, and we're investing to help you get them better and therefore higher value. So that's part of the process. If you try to present you're perfect, that's just not going to work for Jordan.
So, well, let's open it to the panel. Sort of, what are the 3 non-negotiable things that you look for in a startup before you'd actually consider investing? So I think team is obviously, very important. What are some of the other sort of non-negotiables? Nick, anything?
You got to have a moat. Like there's just so much noise out there. How are you going to rise above? And especially if it taps into, number one is you got to know your audience, who you're talking to. The reason that Jordan's team has so much success is because they've got a whole host of advisors that are specialists in the space. That That's strategic capital. And that's a risk mitigation effort on their part. So plus it feels good to be able to contribute. So if you can make it personal to that individual, to that investment committee, to Camila's point, then you'll have a lot higher likelihood of resonating and creating a rapport with them, or Rappoport.
Okay, whatever. So did you say that they have to have a moat? So sustainable, unfair, competitive advantage?
Yeah, and lean into it. Maybe sometimes it's tribal knowledge. Maybe you know, if you were a CPA for 15 years and you noticed that there was an unsolved problem, that's a good foundation for telling your story.
Do you look for IP protection?
Not for me, no, just because it's so early, and I think, you know, by and large, except for instance, like biomedicine or the pharma space, and I think that's appropriate. But for here, it's just like who can get to market fastest. Maybe for data science, things will change quickly. You know, what costs $100 million from a modeling perspective in like a year and a half, that's going to be cut by probably 10x.
Aren't you concerned about second mover advantage potentially being, you know, a winner over first mover?
Case by case.
Yeah, I would sort of agree with you, Roger. A lot of examples from BlackBerry with the iPhone. We usually insist that they have some, that the mode includes proprietary IP and experience. But the other thing that we think is fundamental, when I've looked at 35 years of making 100 personal investments at the angel level and all things we do, the key characteristics of a startup CEO are, first of all, they're never going to quit. No matter how the world changes, they're going to keep at it to get it done. And the second thing is that they're good in football parlance, a good broken field runner. When the world changes, they change with it. If they're planning to do this and under any circumstance the world changes, they still want to do that, then that's not going to work. So we look for those two characteristics.
Darwin, anything else that you kind of look for?
So I think I mentioned that our fund is called Good AI Capital. We look for people that are genuinely believe in the mission. So this is something where I think like what you mentioned, that this is not, you can tell in the first meeting. Somebody who just say, try to leverage the latest buzzwords and try to put in on, say, something we want to do good to the environment, so we want to invest. So these things don't fly, and you can see immediately. And we have a very, I would say, quite a good filter for those things. And these are the things that we look for because ultimately it's the integrity, it's the sort of the values that define what an entrepreneur is. Some of them may not be exactly right, but I think it's the overall mission has to be aligned with what we believe in. So I think that's something we look for.
Can I add to that?
I think another important thing that we haven't mentioned is like the investment fit. So sometimes I think there are great solutions, but us as a VC, we don't have any experience on that field. And as a founder, I think a word of advice I would give is like also pick who you pitch to, because at the end of the day, your solution might be amazing, but we are not exactly the investors that are going to help you thrive. We don't have the connections. We don't have the capabilities or skills to help you thrive on your business. So I would say, yeah, like for me, a non-negotiable is knowing that I will bring some value to this company and not just money.
I think that's a great point, because fundraising is such an incredibly time-consuming event in your life. And I see some of my entrepreneurs going off on tangents where you know that, yeah, it's a great name, but they don't invest in that space, or they've got a competitor in that space. If they're invested in another company in your space, typically VCs won't invest. So really optimizing for time is absolutely critical. I wanted to say one other thing about using the lingo. You have to know how to use it. I had a guy in my office who was telling me, I'm going to do this, 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 and then in 6 months' time, I'm going to pivot and do that. I was like, if you know where you're going to pivot, why don't you just go there now? But he was using the lingo, and he just really didn't understand it. So losing credibility, I think, is, when I'm looking at investments myself and I see people that just sort of lose credibility instantly, it's like, I back off from that. Jordan, you had something else to add.
Yeah, you got to have a kick-ass lawyer like Roger Rappoport, and not brown-nosing. But the United States is a litigious country. We solve everything in law, in court. If the group doesn't have the fundamentals, the agreements, the proper incorporations, the proper founders, all these things in place early on, it's a recipe for disaster, because you're going to love each other until you make $1 million, and then you don't love each other anymore. So the legal paperwork, it is not trivial, guys. It's really foundational. The second piece, and I'll move on, is the tribe. You're in this alone. Being a CEO of a company, it sucks. It's not fun. I know this guy in front of me, he's smiling and says, "Oh, it doesn't. It's hard work, it's lonely, it's difficult." You need a tribe of people to support you, to help you emotionally, mentally, psychologically. You need somebody to cheer you on and pick you up when you're down. And if you're going to do it all by yourself, it's difficult to run the rest of the field, like Paul said, and make it to the other side when things are not working.
Okay, we've got 5 minutes left, so I'm going to try and plow through some of these questions that are really important, I think, in terms of pitching. And being able to clearly articulate a value proposition is so vital. Darwin or anyone else in the panel, what are some of the effective strategies that you've seen entrepreneurs use to really clearly articulate a distinct value proposition?
Yeah, so I think I can talk about that. I think interestingly, we just right before this panel, I talked to an entrepreneur. He was just telling me, explaining one of the technology he was explaining to me. But he was just talking about, I asked him, who's your customer? And one thing that he mentioned, the entire world is my customer. So not to make fun of that, but I think the idea is, I want to drive home the point that if you want to have an effective pitch, the first thing is that explain how your customer is using the product. And the customer should not be the entire world. I mean, that's something where we talk about the whole market. The market can be, a medical doctor, maybe somebody else. So the idea is that really also force you as an entrepreneur to think through that. So we have in tech, we have a use case, basically. Who's the use case? What is the use case customers using? Showcase that as part of your pitch story. Basically say, oh, a doctor in this office today, he has to transcribe his data using his voice, but he cannot do that. He has used voice to do that, and then you have this technology can autocorrect on the fly, and then actually save it in the database somehow. That's a very strong story. And then explain the product, explain the market, and potentially, even tell the world how you're different than all that stuff you talk about, the moat, what is your AI technology behind it. Then you can just that will be your second point, because we have done this in our research in school, and this is why we can apply this technology towards this. And then that's become a very effective pitch or strategy. So use a story, use a use case to illustrate that.
Anyone else want to chime in on really getting that value prop across? I think that's great insights.
Well, I would actually say that each founder has their own style. Like you sometimes have come across really hilarious and funny founders that engage you because they're making funny jokes, or really direct founders. So you have to find your style. There's not a clear, perfect pitch that you can do. You can use some resources, and you can use some web pages and podcasts that tell you how to do it better. But I think also finding your own style and practicing kind of a pitch and trying to use your skill set in order to convey a message is the way to go, I would say.
You also need to articulate the vision and be able to defend it completely at a high level. I think that's key, and not get into the minutiae of the technology, because that's something you sort out in due diligence.
Nick, you had something to add?
Yeah, whenever we're pitching, we've got just a couple seconds to make a good first impression. So if you have the first 30 seconds down pat, you don't have to think about the content. Instead, you can focus on delivery, and then from there, you can naturally roll into the rest because you'll be feeling confident because the first part goes well. That's just something you got. It's just like repetition. I like the point about finding your voice. I think that's very well put.
Yeah, and I think what I often see entrepreneurs doing sort of as a mistake is having a slide with too many bullet points. And you guys never want to have a choice as to whether to read the slide or listen to the speaker. So, having a few bullet points to reinforce what they're actually speaking about and telling the story about, can really, that's to reinforce. Just one
Can I
question.
speak to that real quick?
Yeah.
Who watches All In, the All In podcast? Who knows what that is? Okay. The All In podcast, I strongly recommend it. So Chamath Palihapitiya is one of the fellows that's on there. He was number 3 or 4 at Facebook. Now he's doing social capital. He mentioned that pitch decks, to Roger's point, are kind of interesting because you can get flashy, they can be colorful, and you can kind of leverage this like whole group think approach. But in reality, what a lot of the best investors will do is they'll look at deal memos. So just words, 5 to 10 pages. You can't get tricky, and so that's something that I'm seeing in the industry a lot more. Are you guys seeing a similar strategy away from pitch decks?
Usually, though, just a 2-page deal memo.
Question I get all the time, and I just want to get your take on this. Financial projections. Include them? You want to see them in the pitch deck?
Yeah.
Okay. So I know,
No.
Paul, you have a different view because you're going
Well,
early in biotech.
We invest very early, and we invest in all different markets. If you're looking at life science, the biotech or medical devices, you've all used spreadsheets, right? I'm sure. The old saying is that you can make a spreadsheet sing any song you want to sing. It's driven by assumptions. So your revenue projections are based on assumptions, and the assumptions at that stage are just pulled out of the air in general. Now, what we'd like to indicate, what we'd like to see is some information about how big the markets really are. Why do they think they can take a share of those markets? That's their moat, the differentiation. What is the exit strategy? And what kind of return for a certain level of risk can you get? But just a financial forecast, especially in early stage, is just BS.
Well, Paul is a much better, smarter, and more resilient investor. But for me, sing, baby, sing. Bring the financials. I want to know what you're talking about.
And they've got to be, but obviously, Jordan, and it's got to be based on a model that's built from the grounds up, inside out. And so, I'm kind of with you when I look at deals. I want to see projections, and I want to be able to test that model, do some stress testing, with questions to the entrepreneurs on their assumptions, right? Because you're right, you can make that spreadsheet sing whatever you want, but I think you'll find out very quickly if it's based on false assumptions.
Just to add to it, real quick, sorry. It shows the intelligence you put into your business. Do you understand your business, how it grows? It's not going to be the same spreadsheet in 6 weeks or 6 months. I guarantee that. But it helps me understand, do you understand what your business is going to look like in a few years?
A VC called me and said, I just want to tell you why I'm not investing in your client. I asked this entrepreneur why that number was in that cell. And he said, that's a great question. I'll ask the person who prepared the model and get back to you. Okay. If you don't know why every number is in every cell of that spreadsheet, you're in for some pain.
I rather, instead of seeing financial projections, I like to actually see existing what's been happening in the last 6 to 12 months. Do you have a customer? How much they're paying you? These are the things that actually I'm more interested in. If you're focused more on a tech platform, looking at what is the user metrics, how often do they use your technology? How often do they use it? What are the values that they can create? Sorry. So these are the things that we actually look at. Then we would say, now because we have to do expansion in a different market, do a different product, then I would say actually use that to kind of put it back into the financial projection. So therefore, we need to hire 5 more engineers in order to build this product. We have the traction to support that. In that context, I like to see the financial project, other than the fact that we're going to own the world in the next 12 months to 24 months.
So even at the seed stage, you want to see some unit economics, some KPIs?
Yeah, I think that would definitely be interesting. So it's something where I think one thing we talked about is the product market fit. This is something we need to look at prior to the projection side. Whether it's a customer has been using it, doesn't have to have any financial kind of like context with it. Maybe they don't have any revenue, but it's the fact that they want to do a trial with you. That to us is a very important aspect of that kind of investment decision. Also.
So you put weight on unpaid POCs?
We invest in a lot in biotech. A lot of them is actually kind of proof of concept in the sense that, well, does your technology do suppose it does and generate the type of data? The data can actually amount to, say, some of the conviction from the customers that because of the data you generate, we can actually create the next project, which is actually maybe a paid project for that.
I just want to add one comment. Your question should really be addressed by market segment. That if you're doing software or you're building some device that you expect to start selling them in 4 months, 6 months, you absolutely do want financials. If it's biotech, they've got a great molecule and a great team, and they're going to, which is years away from the revenue, their projections mean nothing because you have no idea what the rest of the world is doing anyway. So I think you got to answer that specifically for each different market. If you're doing software or SaaS where you can start having trials in 3 months, then obviously you want projection.
Yeah, while Rob's got his back turned to us, so we can just sneak in one more question. What advice do you have for the entrepreneurs in the room today to build and maintain relationships with investors post-pitch? What should they or shouldn't they do?
Communicate, communicate, communicate. Good news, bad news, full disclosure, monthly reports or at least quarterly reports. We actually insist on that. We don't get involved in boards and things because we make a lot of small investments, but we have a quarterly call with the CEO. We have milestones that we track and so on. So yeah, communicate, good news or bad news.
And in addition to that, if the investor is giving you advice and you check in with them 3, 4, 5 months later and you followed their advice and it worked out well, that's a beautiful thing because they're judging you whether or not you're going to be able to execute, because that's half the battle is being able to execute. So I would say that's something that could be valuable.
Yeah, I mean, I advise my clients as they meet investors to keep a list and keep on communicating with them. And very often the investors will actually reach out to them and say, "Hey, why don't you come meet with us?" Because that constant communication about great news that's happening is just saying you're executing and executing and executing.
In addition to staying organized, which I think is one of the most important things. So Camila and I were speaking before this show, and I showed her this list that I have. It's called Nick's Short List. It started off with like 5 people. Now there's almost 500. I've been doing it for about 8 years. This is something I stress to everybody because as cheesy as it is, your network is your net worth, right? That and integrity. So mine has the individual's name, another column for keywords, maybe like green tech or attorney or whatever the case is, and then their LinkedIn. So Dunbar's number says we got about room for almost 150 people in our brain. So if you can use a simple database to be valuable to a large amount of decision makers, celebrities, investors, you will meet these people. We're in the Bay Area. Then you can be visible in the whole recency principle. And in fact, that's something you could start tonight, is your own short list. And it will continue to serve you for the rest of your career.
Nick, is my name on the list, and what does it say next to it?
Number 1, Jordan.
What does it say next to it?
It says prickly guys, stay away.
I don't know. When I was looking, I just saw block. I don't know what block meant. I don't know. Well, thank you, panel. Really appreciate it. Now that Rob is here, he's going to start arresting us. I think it's time to wrap it up and get on with the pitches.
Well, let's hear it for the
you all.
panel for their insights. So now it's time for the main event. So we have elevator pitches, no slides, 2 minutes followed by 7 minutes of feedback from the panel. This is not a pitch contest. There's no first, second, third place. There's no t-shirts or hoodies or certificates being given out. These entrepreneurs are interested in getting funding, or at least interested in getting a second meeting. And these are serious investors. Look how serious they are. They're seriously interested in investing in quality startups. Since we're in compliance, because this is a law firm, there will be no verbal ask with a dollar amount, but all the panelists have the executive summaries of the presenters, and they may be stated in writing. So first up, we have, Joe is our timer and our bouncer, so please comply with the time limits, or else you gotta deal with Joe. So first up, we have Adam and Newsick. Applause.
Did you know, in 2021, the Mechanical Licensing Collective collected over $424 million from the digital streaming services such as Spotify. The only problem is nobody knows who this money actually belongs to. The absence of tracking in music metadata leads to obfuscation. That means that musicians that have poured their hearts and souls into this music go essentially unpaid. Introducing Newsick, helping music creators get more from their music. With the advent of generative AI, obfuscation is only going to get worse. That's why we enable the tracking of music metadata inside AI datasets. Our business model is based on microtransactions and license fees, and we've already generated 6 figures in revenue. All of that without a seed round. We're on track to do another 3x, at least, this year. My name is Adam Place, and I've been investigating the intersection of music technology for the last 15 years. Newsick started over here, right? Yeah. I started building Newsick 6 years ago when I got amazed by the opportunities that existed with blockchain technology and AI. And I've been investigating, we've iterated multiple times towards product market fit. We've built MVPs, and we've validated that teenage girls will spend the same price we used to pay for CDs in 1999 on 15-second clips of music that they can then go on and share on TikTok, competing for virality. Thank you guys for your attention. The bell means it's the end, I presume.
So I guess, who's your customer? How do they pay for your services?
Yes, so our customers are music artists and rights holders, right? So this includes all the way down to the independent, self-releasing artist, right up to the major rights holders. And they pay with microtransaction fees, with licensing fees, depending on the scale of the customer, right? So we work with artists, with independent artists. We don't need to charge them anything. And we work with, startups that, have got some budget. And so, they will pay a license fee, for example.
So what's the distribution platform for once that music, the owner of the music pay you for this? Aren't their music going to be kind of streamed also via Spotify? If that's the case, then how are you going to extract that part of protection?
Yeah, so we're only focused on next generation protocols. We're not building this for the incumbents, right? So there is already a niche of independent artists that release music entirely, without leveraging the streaming services, and are able to make thousands of dollars, might I add, from a single song, right? Which is transformational for artists.
I'm not your investor, but why do we need to solve this problem?
So this is the closing of a 25-year cycle that started with the emergence of the advent of digitization. So when we started being able to download music files for free with Napster, the fundamental simplicity of a music file was revealed, right? This idea that we can transfer the value of music to one another with no economic incentive or gain for the original creator. This is the foundational problem, I would argue, of the first killer app of the internet, right? I would say that peer-to-peer file sharing absolutely transformed the way that we use these tools. It started right then. Data has been missing, metadata has been missing from the fundamental file structure itself and the distribution rails. And actually, as a tech industry, we've got a lot to answer for, because musicians are making the music that we all love. So many consumer products have been driven by music, but we're not paying artists properly. This problem needs to be solved so that we can, because we value artistry. We don't want another manufactured pop star. We want true artistry to rise to the surface and to be allowed to experience the kind of music that you guys, that you grew up with, right? Like the first CD I found was when the CD player was released, Sgt. Pepper's Lonely Hearts Club Band. And I thought, how is this band so big? Like do you remember the cover? There's so many people on the front of that album. And I listened to the CD and I was amazed. Like this was incredible stuff. And the first CD I bought for myself was actually the Spice Girls, right? So
what is fair compensation? You said we're not paying musicians fairly. What does that look like on your platform?
So fair compensation means musicians are at least credited, right, if the track is used on some level. If it's monetized, then we're talking about a real share of the piece. So this could be in one economic model we've been testing out. The artists get 50% of all of the income from that track. 25% is shared with early backers, and 25% is shared with network operators.
And if you get acquired, which is how a lot of startups are able to kind of continue growing, how can you make sure that whoever acquires you is going to maintain this fair distribution?
Well, this is the merit of decentralization, right? Because you can't necessarily trust me to turn down $1 billion check. But if the network is sufficiently decentralized, then it won't matter, because you won't be relying on me. You'll be relying on the integrity of the network that we've built.
Excellent. Thank you, Adam. All right.
Right, next up, we have Andres and Coley. Applause.
Hello, everyone. I'm Andres. I'm the CEO and co-founder of Coali, the next generation AI-enabled job marketplace for recent Latin American grads. Did you know, guys, that in Latin America, there are more than 19 million of recent grads that are unemployed? And this number grows year by year. But if you go to LinkedIn, you filter by entry-level jobs in the last year, there are more than 12 million job offers that have not been fulfilled. But guess what? This time we're going to use AI to connect and to enable job creation. Not only by providing a fit between the job and the person, but also providing education to allow them to fill that gap. We are charging a 4% of the annual salary for the professionals to the companies, but we guys have generated traction. In the last year only, we have generated more than 14 a $40,000 intake rate, work with more than 39,000 professionals, more than 15 universities, and we have even been bought by Schneider Electrics and Unilever, two Fortune 500 companies. We have been invested by Google Latin Founders Fund, $100,000, and we want to grow. That's why I'm here with you guys to ask for your support, to invite you to join the revolution and to use AI not to end jobs, to create more, to make it that easy to ask for an Uber. Thank you.
Did you say 48% or 4.8%?
I'm so sorry.
Forgive me. In the revenue model,
4%.
4.8% commission?
4% of the annual salary, yes.
Okay. So problem, great. I understand it. Very easy to understand. Are we pushing a rope? Are there enough jobs for the Latin grads to give you the level of traction that you want to get to the next level? Because I know unemployment is super high down in Latin America.
Correct.
So is the market active and engaged enough for you to get the right traction and the right speed, or are we pushing a rope? In America, when you say you push a rope, like you're forcing something to happen, that's not going to happen.
I think that pushing a rope is building a bridge, bridging the gap.
Is your market able to give you the level of speed and traction in Latin America to get the numbers you want? Because I'm not sure it is.
That's a good question. No. That's why we have built this artificial intelligence to not only connect recent grads with only Latin American jobs, but also jobs from companies in the US.
It might be kind of interesting to look at be able to package into data sets and sell that to universities. Say, like, this is the kinds of jobs that people are hiring for, and we know that through real data. So this is the kind of content you should teach to schools. Maybe a new revenue stream. I don't know. Is that something you've considered?
Yes, we right now have 15 universities in 3 different Latin American countries, in Colombia, in Chile, and in Peru, and we're aiming to expand in the whole region. There is a huge opportunity in that market that has not been tapped by any company.
I have a question. So why are you now recurring to VC? Like, as I understood, like you guys are already making some revenue or some traction. Why now? Like, how are you going to scale? How are you going to use the funds when you get VC funding?
Great. So right now we are not looking for capital for runway. We are already making revenue. We want to expand. So we aim to use the funds in 3 things. First, go-to-market strategy. We already know that it works with universities and with companies. We need more power to get more companies in, to enable more job creations. Second, we have already developed our AI that is making easier to find job opportunities. However, we still need to fully automate the whole process. In other things, more interviews, different tests, more content. So that's the second thing. And third, we need some operational power to be able to be present in all other countries in Latin America and expand our services to the companies within the US in different states.
And another question, where do you get the data from? Like, how do you enrich data in order to be an AI company? Like, how is that?
There are 3 main sources. First source, universities. We have partnered with universities, with their alumni. They provide us the information so that we can have the trajectory of the professionals. Second source, digital marketing and inbound marketing. The professionals themselves, they enter into the platform, they deliver their data. And then third source, that's market. We do web scraping and we extract from the internet and from the social media some data from the people so that we can map those career paths.
Thank you, man. So talk to me about revenue drivers for your business. What things you're going to track to get the revenue up? And most importantly, these platforms are great. They have usually 3 to 4 or 5 years life expectancy, and they either get higher, purchased, or they die. So what's your exit trajectory? Where are you taking this company to?
Good. So first, revenue drivers. So right now we have a big pool of professionals in our platform. We need to increase the number of companies. Like right now, we have more than 40,000 professionals in the platform, but we have around 1,000 companies. If we put that number of the companies up, our revenue will go higher. So that's one. Second, I would say despite it is really positive, our stay rate, like the number of months that the person stays in a company, is more than 4 months. So it's really nice. It's a solution that works. But if we can prove that that can be extended toward a year or two, that can be also beneficial for the company, so that will increase our revenue. So those are like our two main indicators for increasing revenue. And then our...
I'm more focused on the valuation. And how do you drive the valuation up? Is it purely revenue, or there's some data play, or some other factors?
So the valuation for our company, it's drive through revenue and also through our artificial intelligence model. So as we have more and more data and our model is more and more accurate, we can prove that the person can be matched with a role. That will increase our valuation. And about the exit strategy, we are planning to exit by acquisition as like a handshake company, a handshake, or Indeed wants to expand and tap into the Latin American market.
Who's going to value the learning you're going to acquire from the AI? Who finds that information useful?
The companies, as they can have a better match, the professionals, as they can have a career path, and the universities, and they can map the career of the professionals.
Excellent. Great. Thank you. Great pitch.
All right, next up, we have SoftWorks. Applause.
Hello, everybody. I just want to take this moment to tell you this is my first pitch ever. Just to let you know. Thank you. Thank you very much. For everybody who knows how this feels, this is nerve-wracking because I am so excited to share with you what we have in store today here at SoftWorks. We're a mission-driven studio here to make software human again. And I'm here to present to you Paradoxly, our flagship project. We only work on mission-driven projects because we feel that it is time that technology serves us and that it works for us. And so the last 3 years, I learned something that was a little bit difficult to process because I was in a near fatal car accident, and it took me a while to recover from that. And I discovered that about 60% of Americans are living paycheck to paycheck because as soon as that happened, everything just started to fall down. It took me a while to build myself back up, but I was determined. I was saying, you know what, we got to make this happen. I have to figure this out. So I did. I started doing research, trying to understand why is it that I don't know anything about money? Why is it that my friends don't know anything about money? Why is it I was in that position in the first place? And so Paradoxly was born. We're here to create a platform that uses AI to help us navigate our financial issues. We're here to create a community that supports you to get to that goal, that's not filled with scams, that's not asking you for crypto, that's not making you just want to put your phone down. And we're here to put it all in one simple-to-use app, right in your pocket. So our market, our focus, like myself, is to help the Gen Z and the millennials understand their pockets better than I did when I had the accident. And looking into it, there's about 74 million. There's about 74 million of these, target market, and they're asking for this app. And so, I'm sorry, am I continue after the bell, or? Time's up. I'm sorry, guys. I wish I had more time, but hopefully we'll do better next time.
So first of all, if that really was your first pitch, that was excellent. You seem calm and collected. Really? Yeah. So in fact, all right. Now for the critical stuff.
No, please do.
I think it was not nearly specific enough. It was abstract.
Okay.
And if you could walk through, and this is kind of like we were talking a little bit about effective storytelling. Yes. If you could say, let's take Sally. Sally has XYZ problem. She learned about our solution, and then, value proposition. Or when it comes to X, a lot of folks have problems with Y, which is why we created Z. Okay. That's a simple formula that you can use to boil your value prop down into like a bite-sized piece. Okay. So I would focus on a specific story of success.
Okay. Yeah. Sounds good.
Yeah. Was that Jordan? Was that okay? See, Jordan's not even paid. He's checking his TikTok right now. That's what's going on.
So I don't even do TikTok. If I was on the Shark Tank First, I would say, I'll be Robert. I'm so sorry. I'm glad you're healthy. I'm glad everything is okay for you, and give you all the love. Then Kevin comes in and he says, you blew half your presentation on your personal story, which may be necessary, but it wasted a lot of time on the business, the value proposition, and everything you needed to tell me as an investor.
That's true.
That's true. I didn't understand anything about your product other than the desire to help 74 million people.
Yes.
So I can't ask you any good questions right now.
Okay, no problem. Yeah.
We can start with what way does the company drives revenue? Like, what do you exactly sell, and how do you get money?
Right. So the value proposition within the app is that we deliver educational content. We have the AI co-pilot, which is an absolutely perfect opportunity to bring technology out, all right? So it reaches out to you, notifies you when to buy, when not to buy, how your finances are going. And on top of that, there's this extremely rigorous vetting process that we have developed in-house to make sure that the community is safe. And for that, we're going to be charging a maximum of $10 per month for each user, to gain access, or start at the very bottom, which is about $5 per month.
Thank you.
Yeah, no problem.
I'm confused as to what the actual product is and who the community is.
Yes.
Are the community advising the Gen Zers or the millennials?
Yes. So good question. So it's actually a situation where we have a couple things going on. So we have the community, right? In the last year, what we did, figuring out, researching, talking directly to our community, we have these hobbyists who day trade, who know the system in and out, and they're willing to share, right? So these are like community heroes on our platform. But there's also partnerships that we went out and we want to shake hands with, and we say, hey, can you bring your content on our platform as well? So it's sort of a two-tier level situation.
So how does the Gen Zer connect with the community? They ask a question and then it's curated?
Yes. So again, that's a beautiful question, because on one side, when you're directly communicating to your personal financial co-pilot, yes, it'll be completely tailored to you. It'll have all your insights. It'll know everything, all your transaction history, everything. So it knows you better than a financial advisor would. But then if you switch over to another side of the app, you're talking directly to actual members within the app. So you have both support right in one place.
You're trying to do too much. By saying there's educational content plus the community and an AI co-pilot I would focus on one of those, right?
Mm-hmm.
And then also, what's the differentiator on why that is unique in marketplace?
I love that question, because if you were to go and look at every single financial app right now, all you're going to see is charts. But if you go into the campus and you speak to the specific target market, they're not going to sit there and look at all of that. They're living a very fast, these are digital natives we're talking about, Gen Z and millennials, right? They're used to using these things. They want things to work for them, right? So automatically, by not just giving charts and deep systems and designing this platform perfectly and easy to use, we're already winning them over. You can look at things like Cash App, right? They don't even need an explanation. They know exactly how to use it. But if you go into a little bit more detailed fidelity, they start to zone out. They don't know what's going on.
Excellent. Thank you.
All right, next up we have Bunny Money. Applause.
Hi everyone, I'm Fabien Lamaison, founder and CEO of Bunny Money, an impact finance platform for businesses and their employees. More than 90% of employees want their companies to make a positive impact, but unfortunately only a few do it. And that's really too bad, because actually impact also drives engagement and a more productive workforce. And turnover costs a lot to companies, more than 50% on each payroll, and that's represent 200 billion per year. That's where we come in. With our app, employees can allocate a portion of their payroll towards impact. And they can save with T-bills, they can invest with climate and social projects, and they can also make donations with the sponsorship of their employers. The companies can use the portal to drive their impact programs. They can configure matching gift programs, and they can also seed the wallets of their employees with some money to make some impact. The nonprofits can fundraise for free. They can invite their members and find new donors. Our business model is straightforward. We charge businesses with a subscription fee based on active employees. We also earn money on all the deposits with an interest coming from the bank partners. We are a B Corp, and we are a diverse team with experience in banking, sustainability, non-profits, and we scale SaaS products. We launched last year a very simple app to save and donate, and we are about to launch the business portal with the first companies and their employees. And after raising 400K in angel investment, we are preparing our pre-seed round and to finance our roadmap. And thank you.
Hello? Thank you, but why do we want to solve this problem? Why does a corporation want to pay whatever subscription to solve it? What's the incentive, financial incentive, and other business imperatives, please?
Yes, I mean, there are two things, first to help save the planet and fight against climate change. And
Say that again, please.
Save the planet and fight climate change. And more and more companies are actually asked by their employees, but also their partners and suppliers, what their impact is. And more mid-sized companies. And a less engaged workforce is actually less productive. And so the companies are losing a lot in turnover. And Gen Z and millennials, it's really important for them that their company is making some impact. And they expect that. More than 80% of Gen Z and millennials. And so we are talking about a lot of people.
I hear about this a lot. There's no data to support that thesis. There's no empirical data in the US to say this is actually a problem that needs to be solved. Give me some numbers.
I mean, that's 77 million employees that are asking for impact actually for their company. There are a lot of research on it.
I think what Jordan's saying is, if you had data around A/B testing, hey, retention was specifically connected back to this product, then you could make that claim. But I'm not so sure that I'm not convinced that somebody's going to stay at their job because they have they find purpose because their employer is helping match for. I could be wrong, but I don't think so.
The Gallup research actually show that there is a direct link with purpose-led engagement and turnover.
So I can speak from the European perspective since I used to live in Germany, and I know for a fact that a lot of employers are seeking to kind of pull on records for ESG impact. But as a question, what is the benefit for employees? Do they get, for instance, I know there's some tax benefits to it, at least in the European Union. Is this an incentive you use?
Yeah, we think there is also, 7 billion per year of money set aside by employers that actually they don't spend on impact and donations. And so we think that employer sponsor money, impact investment, can also incentivize the employees to actually do more. So think about, $100 or $200 every month coming to that wallet to do some impact. Yeah. So we think it's worth it, and that we could also even do some advocacy to a state-sponsored plans like the 401k. Some people maximize their 401k. That's the only place where potentially you can do ESG impact investment, but it's a black box, and that goes to the usual suspects. And so we think that there is room for real impact investment made differently. And millennials and Gen Z default to impact investment.
And you choose the projects that are posted in the platform? You choose the impact projects, or?
Yes, the idea is to curate and at some point even to list, let's say a company emits a green bond, they could also involve their employees in that and incentivize them. So it's a double effect in impact.
Did we get a bell? Great job.
Thank you.
All right, we've come down to our last presenter. Time flies when you're having fun, right? So last but not least, let's hear it for Trace. Applause.
Hello, my name is Daniel. I'm CEO and co-founder of Trace. I've been co-founder twice, and I've raised over 20 million in our past ventures. We come from Mexico, where buying and selling a vehicle comes along with fraud, starting with trust and safety issues, unfair pricing, uncertainty about the mechanical and legal status of it, and for sure, limited to non-existing financing options for a pre-owned car. We're building Auto Trader for Mexico and Latin America. Right now, what we are doing is getting a hold of the trend. The market is big and it's just getting bigger. Today it's worth over $42 billion and it's getting bigger and bigger. It's growing at a 5% compound annual growth rate, and we're not letting it go. Mexican vehicles has doubled since 2006 up to 2023. What we're doing right now is creating a peer-to-peer marketplace where buyers and sellers can transact their vehicle through a safe haven. So peer-to-peer transactions could be hassle-free and smooth. Right now, we come to San Francisco to create our pre-seed round, and basically, we're creating a grasp of this opportunity. Basically, that's it.
If only we had some Latin person on the panel to ask good questions.
So, what is your revenue model? So, like, is it like a one-time payment, since I guess you go into the app to buy one car, or how do you retain your customers?
That's a really good question. It's a single transaction model where we charge a 3 to 7% escrow payment service, depending on the sales value of the car. So.
Okay. And for instance, in the regulatory and like the anti-scam part, how do you solve that? Like, let's say I buy a car in Mexico City or in Bogota, and the car is damaged. Let's say, yeah, I bought it for a fair price, and then the car doesn't have a good standing. So how would your platform would help me solve that?
That's a really good question, Camila. Today, what we're actually doing, we're just a descriptive platform, meaning that we just give radical transparency about the legal and mechanical conditions of it. If you decide to buy it, we can eradicate fraud. Basically, you know what you're buying, and that's it. Today, basically, what we're doing is minimizing through an MVP what we call pago seguro, which is payment escrow right now. So we're starting little by little, but basically it's a descriptive method. We are not getting the liability.
What is your moat? How do you protect your business? Let's say if one of the large dealership within Mexico region, they saw you, they're doing something interesting, so they can actually facilitate and build something. I mean, they have the databases, they have all that legal regulator clearance already. So how are you going to protect yourself from competitors entering the market?
That's a really good question, Darwin. Basically, the difference between dealerships, traditional or offline or online dealerships, is that we have a lean asset model. So basically, in Mexico, what they do is they have to buy the car, they have to repair it, and they have to inventory it, which is basically a CAPEX limitation from their side. What we actually do is that money that we're actually not investing into repairing, investing, buying the car, we're actually using it to list more and more and more and more. The thing is, the biggest pain in Mexico is all about the transparency. When you buy a car, let me give you a story. When I bought my Mini Cooper, which was my first car, oh my God, I spent what I used to save from it, I had to spend it to regulate it again and to actually repair it all the way down until it was in mint conditions. So basically, we have a light asset structure. That's how we do it.
Prevent somebody else, let's say I'm not a dealership, I don't have that problem, so I just want to come in. So what IPs or moat that you can protect is that you have the specialized databases that you can actually tap into, where you can actually do assessment of the pricing of the car. I imagine a user cannot just say randomly name the price of this car that they want to sell, right? Okay. And you have to go through some sort of control measurement in order to actually verify that, okay, I have a rack here, but that kind of deduct the value of that. I imagine that's something that you would need to build. But I'm just saying that is that something that you own specifically, and how is it going to protect somebody else to come in here to say, well, you know, it looks like I can build something from scratch pretty quickly. How are you going to protect that?
I think you nail it, and I think that's a really good question. So what our second pillar is valuation tech, okay? So basically, in Mexico, we don't have what is called here in the US Carfax, right? We have the Carfax value. In Mexico, what we have, there are books that are called guías automáticas. So if you want to buy a book, you only have three fields, make, model, and year, and that's how you get an offer. The thing is, we know for sure that the valuation of a car does not only rely on those three fields. You need more data points. So for instance, if you have a Ford F-150 with the same mileage, two of them, identical color, identical brand, etc. The thing is, you're not gonna give me the same valuation of $10,000, for example, for the same car if one of them has only a single owner, yeah, no accidents, and a full maintenance profile. Whereas the other one has had 3 owners, a minor accident, and probably you don't even have the maintenance booklet. So what we're doing, we're creating valuation tech. How are we gonna keep our users engaged towards, keep using our platform and do not sell it towards dealerships? What we do is, we keep up with the price, and you don't want to miss filing the maintenance of that month, because in that way, your price is going down. So we give fair valuations to both ends with our valuation tech. So what you want is, we give fair valuations to the buyer, fair valuations to the seller, and how do we keep them? Through our maintenance platform. That's basically how we do it. So in that case, dealerships do not want to intend, because they actually want to join us through the fair valuation that they can get. Thank you.
Okay.
Give me 5.
Roger's begging me to give him 5 minutes, so go ahead.
I just thought it would be really useful. You know, we had some great pitches tonight. Maybe just a little feedback, you know, because people are here, they're listening to learn. Maybe you could just give a little feedback without mentioning any names, any companies, things you really liked, things that you thought, you know, could be improved on from the pitches tonight, without being specific.
Yeah,
just sort of general.
I can give you a quick one. I mean, none of these sheets mentions valuation or structure or financing. They say, I'm raising $2.5 million, but if it's $100 million, we wouldn't even look at it if it's.
In all fairness, I think a lot of the entrepreneurs are looking just to get a meeting, right? So they want to just get your juices flowing.
I see. Okay.
To kind of get you to say, hey, do you want to have a meeting? But fair point, fair point. Darwin, any highlights, any improvements?
I think, you know, Jordan mentioned it. I think really kind of the storytelling, right? So I think I would say characterize most of the pitch, the founders here try to use one of the personal stories to kind of explain what the product is. But somehow I think that might just got carried away in terms of, like, you know, the history, what happened there. And something that is more easy for me to understand is if you actually have a product interface that showcase what your product does. I didn't know they were actually have a pitch sheet like this. So if they do, then I would just say that sheet would just like put your app screen capture. It's like, this is what I do. That's it. You know, that would save a lot of time explaining. You know, you can tell your own story at that time while I'm looking at what the product does and all that. But I think that might help.
Camila?
I would say, overall, I think they were really good pitches. However, I would suggest that you guys keep it like a little bit more general. Like, we don't know your product like you know your product. So think of it like you have to explain from a general high level first in order for us to understand and in order for us to be on like an eye level and actually give you valuable questions. Yeah, that would be my only take.
Yeah, and I think Jordan sort of had that aha moment with one of the pictures, just saying, oh, okay, it's TurboTax for divorce. Like, he finally got it. Yeah, being able to get to that point very quickly. You don't, as you're listening to the pitch, have to try and catch up and figure out, you know, what is this all about? Nick, anything?
Yeah. I mean, investors want to bet on the winning horse. So if you can communicate that in a succinct way, then you're obviously you'd be more likely, because 3 minutes is like nothing. It's really difficult to be able to convey everything. So just do your best to squeeze it in, and use tonality and colors and stories and pauses to be able to draw your audience in, which I thought largely they did very well. So this, bravo to all the presenters today.
Yeah, I think it was the last gentleman that pitched, they say in journalism, don't bury the lead. He certainly didn't. Started off, I'm a 2-time serial entrepreneur. And then I think...
Street cred.
Yeah, okay. So any really great, exciting news about you, your company, whatever, don't bury the lead. Put that up front, because I think you're more likely to capture investors' attention and keep that attention.
And one last one, always explain what your differentiation is and what will keep somebody else to replicate the thing just because they have more money. And as you asked Roger, the second company that does it is much bigger and might kill you. What protects your business, your moat, as was mentioned?
Yeah, I think generally speaking, from personal experience, I don't like to invest in companies that it's just a first mover advantage. That's the only way they're going to win. There has to be something protectable, even if there isn't something protected yet. I feel like a company should own what it's saying makes it valuable. Anything else? Otherwise, Rob, we'll turn it over to you.
All right, well, let's give it up for the panel. Let's hear it for Roger, our awesome moderator. So let's hear it for Procopio and all of our sponsors. Let's hear it for our event team and our video team. Let's hear it for Joe, our timer and our bouncer. Let's hear it for our audience. Let's hear it for me. So we've broken out the ice cream. Stick around, network, socialize, and connect. Talk to our panelists. Get a selfie with them in front of an Idea the IPO sign. There is an after party, but let's figure out where we're going to hold it. So once again, the Rosewood. And it's only Wednesday night. The patio, pizza my heart. Well, I think we've decided we're going to have the after party here. We've got ice cream, we've got lots of food, and Roger said we can stay all night. So enjoy the after party. Thanks for coming, and
bad
see you
connection
next
there.
time.
Bad connection.